Hello, this is Joe Pryor with virtualrealestateteam.com in Oklahoma City, a part of Redbud Realty and Associates. This is, again, my little pup, my little poodle Henri, who's kind of wants to be in the video with me. And so he's going to help me give you an update about the Oklahoma City real estate market. I do this periodically because I think it's very important that over a period of time that we chart trend lines. And we've now been through the first quarter in Oklahoma City. We have the statistics for January through March, and the news is very, very good. For one thing, we continued what started in December, which was a dramatic increase in the number of closed homes, in other words, successful home sales. That was about 36-37% for December through February. Well, March has equaled that, and so we're maintaining a very, very rapid pace on home sales. And this is really good news. Now, part of the reason for this, of course, besides things I'm going to talk about later, like the economy, is interest rates. Interest rates are staying down. They kind of blipped up a little bit. Now they're going back down. In fact, we have one credit union here in Oklahoma City that's an adjustable rate mortgage with a very low cap that's starting at 1.9% interest rate. And this is bringing people out of the woodwork. They might have waited till June, but they're not waiting now. So this is very, very strong, is that the interest rates combined with the prices that we have in Oklahoma City are creating a strong sales atmosphere. Now, we entered into 2012 with a very low inventory, and that seemed to be something that we were concerned that, well, you know, is all of a sudden everybody going to put their house on the market, and they have not. And so we are still maintaining the lowest inventory level of homes for sale in the last 5 years. Now, this is creating an upward pressure, which is good for the seller. Not so good for necessarily a buyer, even though the prices are still good, but it does create a seller's market where we are appreciating, and that is overall good news for all the homeowners out there that are in their homes right now. Their homes are now worth more than they were 6 months ago or a year ago, actually. So that is also good news, is that our inventory levels are staying down. Even though this is the 1st of April, we're not seeing a dramatic increase. So it's still a good market in that respect. Now, what's happened in other markets is foreclosures increasing the inventory or affecting overall market values. And in Oklahoma City, we haven't had that. In fact, in Oklahoma, we haven't had that because we weren't a subprime state. We had a very stable economy. We weren't crazy here. And so we didn't have that initial meltdown. However, the economy in the United States hasn't been that great in the last 5 years. A lot of income levels are down, a lot of job loss, a lot of other factors that are in there. And so Oklahoma at this point has a fairly decent shadow inventory. Now, shadow inventory includes a lot of different things, but I'm going to specifically talk about short sales and foreclosures. These are where homes come on the market at lower than normal prices. And that can be a real drag on the market. But, you know, with this low inventory level and the strong sales atmosphere we have, we really need some more inventory. I don't care where it comes from. But this is another factor I want to throw in there for you. If you're an investor, and I've got a lot of investors, that's been my primary business for 22 years, then boy, this is what you want to see. And this is what I believe is going to happen. As I talk to brokers that handle foreclosed properties, I'm a short sale realtor team also, and we have other people that we correspond with. There are more and more of these we know that are going to be coming. In fact, the anecdotal evidence is that they're going to start hitting on May 1st, and we're going to see a sizable number. That would normally be a problem in a lot of markets, but because of the strong investor demand and also the strong home demand with not enough inventory, the result is going to be these things are going to be eaten up immediately. When they hit the markets, they are not going to last. And in fact, some right now in the first 3 months, I've seen some VA foreclosures that haven't lasted a day. I called on one, he said, well, you know, it's been 4 hours, I've already got 3 offers. So this is what's happening in the foreclosed properties. We do not expect that to have a drag on the market. It is going to be absorbed by homeowners. It's going to be absorbed by investors because this is what we want, because the rental market here is just outstanding. Now, the last thing is the economy, and this is where we've been fantastic. We didn't have a big meltdown because of manufacturing and auto industry or a housing industry busting, but what we have had is a very, very strong market for jobs. We've had basically the lowest unemployment rate in the country for cities over 1 million in population for the last 4 years. we are now creating more jobs percentage-wise than any large city in the United States. We have been at the top of the list in the top 5 for the last 3 years in terms of income growth. So the quality of the jobs here are very, very good. And as you know, to have a vibrant housing market, you need people with jobs making good incomes because you have to qualify for loans these days. So right now, I'm looking very positive at the rest of the year. I do believe interest rates are going to stay down. They do an election year anyway. The government, as you know, is borrowing quite a bit of money. They want to pay it back at incredibly low rates that are even below the rates of inflation. And so in 2012, I don't see anything changing right now. The future could bring us some surprises, but without some pretty dramatic surprises, this is a great year for real estate in the Oklahoma City market. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.